Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. Good Friday for the bulls. The Nifty has recovered 120 points from the lows. The mid-caps, they continue to do well. Small caps are higher. So looks like a Friday cheer today.
Friday cheer today. Mid-caps, small caps, NSE 500, the entire broader end of the market is really doing quite well. We have quite a lot lined up from the show, especially, a lot of individual stocks off from the broader end of the market. So first up, let's start off the main headlines. Stocks continue to hold in the green ahead of the long weekend. Auto and consumer durables are the bigger gainers. IT stocks drag. Mid-caps fare better.
Cement stocks surge after Adani Group's Ambuja Cement buys Penna Cements for near 10,500 crore rupees, adding 14 million tons of capacity and expanding its market share in South India. Other stocks as well in the cement space like ACC, JK Cement, Sagar Cements gain anywhere between 1 to 4%.
Suven Pharma surges in trade after the company plans to acquire Hyderabad-based CDMO player Sapala Organics. The company to initially acquire 67.5% for nearly 230 crore rupees.
Prestige Estates gains after CLSA retains a buy and raises target to 2,320 from 1,875 rupees per share. Says the company has been among the top two developers in terms of pre-sales over the past 3 years and still trades at a significant discount to peers.
Nykaa under pressure amid company's investor day meet. The company promises growth and improvement in margins. Street awaits execution of the stated targets.
Okay, those are the top headlines for the markets. As we pointed out earlier, there's been a substantial recovery from the lows, right? 120 points from the lows, 50 points higher on the Nifty. It is virtually at the day's high, supported by a lot of individual movers as well. We do have the mid-caps, which are surging, 0.77% higher on that one. The small cap index is up 1%. The autos stocks are doing really well. We have the PSU banking index, which is doing well. So all in all, I would say most of the sectoral indices are in the green, barring Nifty IT and Nifty Media. So Nifty IT has been seeing some profit booking and that continues as well. But some spaces, and we'll discuss that in greater detail, this defense space is doing really well. And, generally the trend has been positive in the broader markets.
All right. Autos, capital goods, defense today, all of them on a tear. Hormuz is waiting at the wall for us, but just before we go to Hormuz, just to give a perspective of how quickly and how smartly, the broader end of the markets have recovered, just have a look at how these indices have performed in the last 8 trading sessions. For the last 8 trading sessions, the NSE 500, the NSE mid-cap and the NSE small-cap indices, all of them have continuously gained. In fact, the NSE 500 is up 9% in just the last 8 trading sessions. The mid-cap is up 12% and the NSE small-cap index is up 15% in the last 8 trading sessions. And the 9th session, before today was the day in which all of these stocks tanked. It was the day of the counting. But Hormuz, quite a lot of stocks I'm sure that you have on the radar.
It's a day of the mid-caps. Actually, it's been a week of the mid-caps. It's been the last 10 days of the mid-caps. You can extend the timeline, but that is what has been for the broader markets. Another record high for the mid-cap index. And some of the movers in today's session, KC International. Actually, the gains are coming across the board. There's not one particular sector there. KC International, Global Health from the pharma space, Bharat Forge from auto and defense. Dixon is another record high today. Indian Hotels is doing well, 3.5%. But the one theme that has done extremely well is defense, and that continues to do so. Data patterns up 7%. Now at the highest point of the day, as is Mazgaon Dock, as is Cochin Shipyard. Bharat Dynamics also trading with gains of anywhere between 3%. Most of them have already recovered their losses that they made on the 4th of June. Paper stocks are doing very well in today's trading session. JK Paper up 11% now at the highest point, nearing 500 is JK Paper. West Coast and Ruchira Papers also seeing gains of anywhere close to 7 to 8%. Stocks that are doing well on the back of strong volumes, and Chemplast Sanmar was there in the list yesterday. It's there in the list today as well. Another 10% on the stock. ICICI Lombard has just highlighted JK Paper, and KRBL seeing gains of almost 9% on very strong volumes. And lastly, some underperformers there. Hard to find in a day like this, but Reddington is down 2.5%, as is Usha Martin, and CAMS is seeing a bit of profit booking at the lowest point of the day in today's session. Back to you guys.
Okay, interesting names there with Chemplast Sanmar. Of course, the PVC prices, they have risen, and that is positive for this PVC paste maker. Thank you, Hormuz, for joining us as always and giving us all those details. It's time to now welcome Jay Thakkar from ICICI Securities for a technical check on the markets. Jay, good afternoon. Thank you so much for joining us today. Well, looking like a good day, but do you think we'll be able to continue these gains, especially on the broader end? Because as we've been pointing out, it's continuous gains in that particular space.
Hi, very good afternoon to you, Sonal and Vivek. I would say that yes, the broader indices are performing quite well. I mean, if you look at Nifty Mid Cap Index trading around the levels of 55,000, Sonal, Small Cap Index well above the levels of 18,000, closer to 19,000 now. I think that these indices have clearly broken out from an upward sloping parallel channel on the upside. I mean, since Jan, we have been seeing that Nifty, Bank Nifty have been struggling to surpass those higher end of the rising channel, and is still trading around those levels, especially Nifty. But mid cap and small cap have really surpassed them quite convincingly with a clear bullish crossover in its in momentum indicators on the weekly daily chart. So I think that mid cap index is heading towards 58,000 now. 54,000 should be very crucial support. Small cap index is heading towards 19,500 now. I think 17,200 should be a good support. So out there, the momentum is there, and looking at that, I think that Nifty also should surpass 22,500 very soon. And once that happens, I mean, 23,500. I'm sorry. Once that happens, it will be sharply moving towards 24,000 thereafter. I've got two buy recommendations, Sonal. Today, one is from the defense pack. I mean, we are seeing the good momentum out there. So my first buy recommendation is on HAL. It's trading around the levels of 5,200 right now. One can place a stop loss below 5,000. Target 5,500 to 5,650 on the upside. The momentum out there on the defense stocks is absolutely bullish, and I think that's going to be the theme before the budget. And the second buy recommendation is on Samvardhana Motherson. It's trading around the levels of 174, 175. So on the lower side, one can place a stop loss below 170. One can target 185 to 190 going forward. Out there, we have seen a good long build up, and still I think there is a lot more upside pending out here as well.
Thank you so much, Jay, for joining us. So Samvardhana Motherson as well as HAL are your picks for the day. But let's now slip into a short break. When we return, we will be joined by the management of Paras Defense and Space Technologies to discuss the company's business outlook and more. Stay tuned.
Welcome back. You're still tuned in to Midcap Radar on CNBC-TV18. The markets have slightly come off from the highs, but still managing to be in the green. But there are a lot of specific stocks in the broader markets which continue to do well, and Prestige Estates is one of them. And of course, we've seen that the real estate packet has really surged in the last couple of trading sessions, and that continues in that space today as well. But specifically on Prestige Estates, there is a note from CLSA. They say that Prestige Estates has been one among the two developers in terms of pre-sales over the past 3 years, which has outperformed. It has done really well in terms of pre-sales. However, the stock still trades at a significant discount to peers despite that particular surge, almost 262% higher. That's been the stock move in last 12 months itself. This is despite the outperformance that this stock is trading at reasonable valuations. But the key concerns for the investors from here on: first, a lower project pipeline compared to its peers because it impairs their pre-sales growth visibility. And second is an increase in leverage due to high planned capex and spend on new land as well. Prestige is scaling up significantly, targeting rental income to grow 5 times over the next 4 years, and the pre-sales growth is what is expected is at 25 to 30% per annum going forward as well. We believe its operating cash flow will substantially support its capex and project pipeline growth, so they're not worried about the debt number going higher as well, because they think the interest coverage ratio will be more than 4 times from here on, and debt will, despite debt increasing, this is not something which will put a lot of leverage on the stock as well. They therefore believe such concerns are unwarranted, and they expect the re-rating to continue as well. And remember, the stock is up 262% in last 12 months already. They've still gone ahead. They've increased the target price from 1875 to 2320. So the stock is very close to that 2000 mark, and that continues to be an outperformer in terms of the Mumbai launch, in terms of the expansion plans that the company has. So a lot happening in this particular stock. But we do have a lot of stocks, Nykaa in focus now.
So more than 3.5 times in the last 1 year. One more thing that the street will be watching out for is going to be the IPO of the hospitality business. We understand they've already appointed the bankers. The company is looking at quite a lofty valuation. It'll be interesting to see whether they can garner that. But like you mentioned, we'll move on to Nykaa. Mangalam is waiting by. He's had a look at the investor presentation. Mangalam, what are the key takeaways?
Well, there are multiple takeaways. The company has set itself on a very ambitious path of growth. Let's see whether the analysts put ink to paper and revise their estimates as well. The stock is flat. It's off lows, but also off highs, mildly in the red, because they are awaiting, execution on these lofty targets as well. So if you look at the omni-channel retail, the beauty and personal care business, where they expect the gross merchandise value to compound at over 20% between FY24 to FY28. What does that mean for their own business? Retail GMV will actually compound at 40% over the next 4 years. The street was hoping for some margin expansion, but the company is saying that there won't be any margin deterioration. So even with this revenue growth, the margins will be at around 25.5% itself, though, the street would have liked some margin expansion. But remember, 25.5% in this vertical is something that, with that kind of growth, should not really be a problem. Fashion has to be their growth and margin driver going forward. 2.5 to 3 times increase in the net sales value is what the company has been targeting. 150 to 200 basis points gross margin improvement over the next couple of years. Also, in the next 3 years, by FY27, they see EBITDA margins in mid-single digits. That would imply around 1300 to 1600 basis points improvement. And steady state, they believe that this can actually be a more than 10% EBITDA margin business itself. All the global brands that they sell in India, in FY21, what they sold, that, in FY24, that number increased by 5 times. They believe that this can further increase by 3 times by FY28, actually making the FY28 global sales to be, as much as 15 times what it was in FY21 itself. And finally, their wholesale business, the superstore, they've spoken about improvement across both gross margin and fulfillment cost. And that would mean that the business, would reach around 9 times FY24 GMV in the medium term, with steady state margins of anywhere between 3 to 5%. So those are lofty targets. The street would just hope that, the company goes ahead and achieves them in light of the competition that the street is expecting.
Okay, all right. The stock is absolutely flat with some negative bias. It has recovered from the lows as well. Thank you, Manglam, for joining us with all those details. So we'll do one thing. We'll slip into a short break now. And as promised, when we come back, we'll be joined by the management of Paras Defence and Space Technologies. The stock is surging up 18% in trade today. So stay tuned for that conversation.
Welcome back to Midcap Radar. As promised, to discuss more, we actually have the management of Paras Defence. We have Amit Mahajan, the Director of Technical, along with R&D at Paras Defence and Space. The stock is surging in trade today. We have a lot of questions for you. First up, thank you so much for joining us. Give us a sense of on-ground activity. How is the order inflow looking like for FY25, and where do you expect to end FY25 in terms of the order book? You've given a guidance for FY28 end at 2,500 crore. FY25, the near-term target?
Good afternoon. Firstly, thank you for having me over. The order inflow looks good. We have a huge funnel which we see consolidating. Our order book, we would always want to maintain about 2x. Not more than that, because a little more than that will also mean unhealthy growth and unhealthy pressure as well. But we are having, with God's grace, much more than 2x order book. Currently, it is standing at more than 600 crores. And as we proceed forward, this will keep adding up. The opportunity funnel is huge, in excess of 1,500 crores. And that would mean that our efforts currently are converting all of these opportunities, which are very high probability opportunities, into order book for our company. As we progress in this particular financial year, we should be looking at doing anything better than 25 to 30% over the last year.
So currently, at the end of FY24, your order book stood at 630 crores. So you're expecting a growth in the range of 15 to 20%. Is that right?
If you tell me 15 to 20% is conservative, I'm saying 25 to 30%.
Okay, 25 to 30% is the growth that you're expecting in terms of your order book activity. You did indicate that order book will continue to grow. It will be 2 times the revenues. That is what you are aiming at, right? So if you're saying 2,500 crores will be the order book by FY28, does it mean you will be able to do revenues of around 1,250 crores by FY28?
2,500 crores of.
If you are...
I would want to give you guidance that we will be steadily growing from here on at 25 to 30% year on year. We have
Okay,
a
in terms of...
this growth for the next 2 to 3 years at least.
Okay, in terms of revenues as well, that is the kind of growth that you're seeing. Now, let me come to margins, because while the top line has been growing, the order book has been growing, margins did see some pressure, and it came in from one of your segments, which is the optics and optronic segment. Can you explain what led to the margin decline this time, and what is the scenario with raw material costs right now? Are there any other pressures that you're seeing on margins?
The good part is the raw material inflation does not affect a company like Paras, because the maximum value gets added in the process of manufacturing. So as much as I tell you this, optics and optronic systems is our leading vertical when it comes to revenues, at the same time margin contribution as well. Because we have a very significant role. We have as good as we enjoy a lot of attention from our customers, and there are very few, or some places nobody other than Paras doing what we are trying to do. Hence, we enjoy a good amount of margin.
But then what led to... Yes, please go ahead.
Second is your defense engineering vertical. Now that is a little competitive space as compared to optics and optronic systems. Now when we are trading in competitive space, the margins over here are lower as compared to optics and optronic systems. Now if you see the revenue split in the last year, you will find that the defense engineering team did 73% of our revenue, wherein optics and optronic systems did 27%, which otherwise, if you see last year, was say 50 or 50+% of our revenue was done by optics and optronic systems. This definitely directly contributes to the profitability of the company. This also, I would want to extend this, that this also happened because one large value product. Now, Paras is getting from components to subsystems to a large value single product company. So a large value product was to get delivered in Q4, will get delivered in Q1, and that shift you can see as an effect on the revenues as well as on the profit.
So this particular deferment that you're saying, as far as that large component is concerned, has it been factored in when you've given the guidance for FY25? That is the first question. The second question which I want to ask you is, you've recently mentioned that you're exploring a partnership with Mitsubishi of Japan for periscope systems. Now, can you give us a sense of, where is the level of discussion at currently? When does this fructify? When do you expect it to fructify? And is this also factored in when you're giving in the order inflow guidance for FY25?
Firstly, the Q4 to Q1 you can't factor in, because these are beyond your control. And what happens is these are very, very complex systems. If you can imagine that we are the only company in the whole of Asia Pacific to develop and manufacture a submarine periscope. So you can imagine the complexity of a technology like this. I do not want to ride on the name of using Mitsubishi as a large company's name and then try and give you some opportunity. This thing, no, I had given you that just as an example to tell you that there are discussions happening between Paras and Mitsubishi. The discussions are happening for something else. Now, in that particular discussion, they also happened to show their interest into a product called as submarine periscope. I do not by anywhere state or do any commitments on these factors. Now, when I'm telling you this as a discussion point, we do not include any of these as our projections or guidance. When we say an opportunity which is of large probability for a company like us, we are calculating opportunities which are having 60% or more probability, where we have bid, and the bid probability for we winning it is more than 60%, is the only when we calculate that as our funnel.
Yeah, We do get that, Mr. Mahajan, because you have just said you're exploring that opportunity and there's nothing that is finalized yet on this one as well. I want to go back to the margin question, because you did indicate that raw material prices do not impact you so much in that particular segment, which is optics. The defense engineering segment did see that one order which was deferred. So on a steady state basis for FY25, what kind of margin picture are you looking at? Because in FY24, you did see a margin decline. So will this improve from here on? What is the outlook in terms of absolute margins?
I would go back to the earlier margins we used to enjoy 2 years back. Anywhere the EBITDA should land anywhere between 25 to 30%, and the PAT margin should land anywhere between 15 to 18%.
Okay.
Mr. Mahajan, a couple of years ago when you had joined us, you were quite bullish as far as the drone opportunity in India was concerned. In fact, you said that Paris Aerospace, has a lot of scope. You had also given us a number. Please correct us if I'm wrong. 100 crore of revenue is what you had anticipated would be coming in from the drone segment as far as FY25 is concerned. Do you stick to that number, or will there be a tweaking of that number going ahead?
There is definitely going to be a tweaking of the number. The strategy in the drone market has to keep evolving. We were very bullish on the drone market, but the dynamics in the drone segment and the drone sector has completely changed. If you see back then, or in 2021, when actually the drone industry got deregularized, if I may call it, or opened up, if I may call it that way, then we were one of the first few companies to already do a lot of work in drone segment. As the industry and the sector got opened up, today we find more than 500 companies either doing some work in drones or at least claiming that they are doing some work in drones. So this makes this market very, very competitive. Paras is very, very shy when it comes to competition. We always want to tread in areas where there is less or minimal competition. And hence, we are not very bullish on drones. But if you see, we are extremely bullish on our anti-drone systems. Here, the development that we are doing, we are developing one of the most cutting-edge anti-drone jamming systems, anti-drone detection systems, and we will, over a period of time, we will also develop countermeasures. Now, all these are not just having great potential domestically, but also will have great export potential. Now, we are counting our bets on this. There are players in this segment, but we would want, and we are aiming to be number one when it comes to anti-drone company of the country.
All right, Mr. Mahajan, thank you so much for joining us today for that conversation. The stock is up 20%. We would have liked to ask you more questions, but completely out of time right now. But that's the word coming in from Paras Defense. Order book is strong. They're expecting 25 to 30% growth and margins at 25 to 30% as well. As we wrap up on this edition of Midcap Radar, we'd like to thank all our viewers for your continued support. CNBC-TV18 recorded a viewership of 93% on counting day for the most unbiased and accurate coverage. Stock markets were reacting to the votes being counted. We had a viewership of 91%. CNBC-TV18 beat competition by a massive margin. From investors to India Inc., the CNBC-TV18 election headquarters was the go-to for election insights. Once again, thank you for your trust and faith in CNBC-TV18.